Today, we're going to talk about what is going on in the real estate market. And we hosted an event not long ago talking about my thoughts on the real estate market, my predictions of what's going on in the future of the real estate market. And so we want you guys to take a watch, take a listen, see what you guys think. I'd love to hear your comments and your feedback. And I really do think that going into 2024, the market's going to be a lot stronger, a lot better than it was in 2023. And I do feel like as the year progresses and the closer we get to the election in October, you're going to see interest rates come down. Not in the 2, 3, 4% range, but down into the 6s. And if we were to get really lucky, maybe it gets into the high 5s, but I really don't think it's going to get out of the 6s. So take a look, take a listen, see what you think, and we'd love to hear your feedback. All right, well, thank you guys for coming. I realize it's a Tuesday night. Obviously, what I wanted to talk about is what's going on with the real estate market. And of course, if you listen and watch the news, they're trying to scare the hell out of everybody, to be honest with you. And there's a huge difference between what's going on in the real estate market and what's going on in the real estate industry. We're going to talk a little bit about both those things. What's funny is I was talking to one of my lender friends who works in San Francisco, and what he's been calling the real estate market lately is the triangle of doom, which I thought was pretty hilarious. He made an actual video about it. So between high interest rates, low inventory, and the news basically hammering on the real estate business about what is going on, it's really difficult for people to try to figure out what actually is going on with the real estate market and what supposedly is normal. I've had a license since 2001. I've been in this business since the mid-1990s, so I've been doing this for almost 30 years. And I don't know if I've ever seen it be normal, whatever the heck normal is supposed to be. So as an example, I got my license in 2001, and if you would have went back to basically 2000 till now, which is almost 24 years, and I would have said to somebody back then, here's what the next 24 years of real estate is going to look like, they would have said, that dude is crazy, he has no idea what he's talking about, and they'd have run me right out of the business. But the 20 years or so that I've been doing this, it has been anything but normal. So here's what I'm hoping that you guys will get out of this tonight and feel confident about this is basically knowing what's actually going on with the real estate market here in Northern Nevada. I know it'd be nice to know what's going on nationally, but really at the end of the day, most of us care what's going on right here in Northern Nevada, unless you're someone like me that happens to also own rental property in other states. But for most of the people in this room, you're going to want to know what goes on here. You're going to want to know what to do to set up yourself to win now and in the future. And many of you guys I've helped, and some of you guys I'm helping right now. And of course, I want you to be confident when you're talking about real estate and not listening to all this nonsense that's out there about what's really, truly going on. So again, whether you're buying, selling, investing, or you just want to know what your home's worth or be educated when you're talking about it with other people, that's what I'm hoping that you're going to get out of this evening. And if you have questions, just write them down, and ideally we'll answer them all at the end. Here's kind of an example of what I think normal is. This house was my third house that I bought, and we bought it in 2001. And why I like to use this house as an example is this was new construction, so at that time, you literally could still buy a house in South Reno for just over $100 a square foot. We paid $270,000 for that house, and it was brand new on a 1/4 acre. But of course, you need a landscape and put in blinds and all the stuff that you do with a brand new home. So I always think of this house as being worth or paid $300,000 for this house. And if you owned a home or were paying attention to real estate at that time, by the time we kind of got to 2005, early 2006, I could have sold that home for over $600,000. And there is no reason why in a 5-year time window, this house with minimal changes should have gone from $300,000 to over $600,000. And for many of you guys that owned real estate at that time also know that the next few years after that, 2007, 8, and 9, were kind of an economic disaster. And this house, I literally could not have sold it for the $300,000 I paid for it in 2009. So you're looking at an 8-9 year time window where literally I had 0% appreciation. If anything, I had negative appreciation. And is that considered normal? I don't know. It shouldn't be considered normal. And I know many people in this room at that time, all we did was foreclosures and short sales. And really, if people at that time would have just kept those homes, that same home right now, homes on that street literally sell for $700,000 and $800,000+ if, when you were upside down in 2009 or 5, you would have just kept it all this time. So it's always playing that long game. The next one I want to show you guys is a more recent. So if you look at the very first house on this list, 2201 Quellwood Drive, that is basically purchased on that far right-hand column for just under $435,000. This is a house that I purchased in 2019. And of course on this list, we're going to compare it to every other exact model match. So these homes are all 4 bedrooms, 2 bathrooms, 3-car garages. They're all in Double Diamond and DeMonte Ranch. They're pretty much all built by Lennar. And for the most part, they're very similar. Like this is the most similar list of homes I can find for you. So they're all basically stucco, tile roof. Some of them might be a little more upgraded than others. I know mine backs a busier street, but of course, because I do this for a living, I'm the cheapest one on here for the last 5 years. And if you look at that first part of the list, The homes that sold in 2019, they go from 435 to about 470. And if you go early into the following year, we push all the way up to 500,000. But if you look right in the middle of that sheet on sale prices, you'll notice the sale goes from 510 and the very next sale is 605. So why would homes like this literally jump $100,000+? And actually, if you look all the way to the very last one on the bottom, somebody bought my model for $720,000 literally 2.5 years after I paid $435,000 for my house. Now that makes absolutely no sense. And the reason why that is as soon as that pandemic started in 2020, you kind of had March, April, May of 2020 where literally nothing was happening. And as soon as June 1st hit, I'm not kidding you guys, June 1st to the end of that year in 2020 was the busiest 7 months I've ever had in my real estate career. And homes were flying off the market at prices that you were just like, I don't even get it. It made no sense to me. But if you look right back in the middle of the page, there's a sale on Blue Oaks Court that sold on February 21st for 605. That is the only sale of the model of much that I have right now. And if you'd have said, hey, my home would have gone from 435 to basically 600,000 in 5 years. Even that is an extreme amount of appreciation over a 5-year time period. And this is what I keep talking about. What is normal? It makes no sense as to why prices should do all that kind of stuff. So the market, though, has backed up, say, 10 to 12%. Obviously, depends on location and things on those lines. In reality, over the last 5 years, prices are up like 40+%. So the fact that, is this normal? I just know this time it's a lot different than it was in 7, 8, and 9, because this time, what you're not going to see is a bunch of homes flood the market. And so the real estate, like I said, market is doing just fine. But these next couple slides that I want to show you is talking about the real estate industry. So for those of us in the business, realtors, lenders, my title officers, inspectors, or anyone when a house turns over that typically does work to a house. So whether they're putting in flooring, whether they're painting walls, anything you do in a house, typically when a transaction turns over that you want to do while it's still empty before you move in, all those businesses are way down. So this is the number of transactions, and this is only for Reno Sparks, and obviously it's October. So I only ran it for the first 3 quarters of the year. And you can see from 2020, where we did almost 4,900 transactions, this year through 3 months, we're down 1,900 transactions. So for us in the business, sucks for us. There's less loans, there's less sales, so there's a smaller pie that for us in the industry, it sucks for us. But for all of you guys that already own homes, it's not that bad for you. You've seen a basic small price correction, but most of the people in this room, other than you, Reed, bought homes far enough back that your price is so far up where you bought it from. These short-term numbers shouldn't matter. And same thing like with Reed buying his house, he's not moving anytime soon. So the fact that in the short term, it might be worth a little less than what you paid for it, don't even worry about it, because if you hold it for the long term, which we know eventually you're going to turn into a rental, it's not going to matter. But if you go to the next slide, the numbers are basically the same. I just did it for Reno Sparks going out for the full year. So you can see it was kind of like the second half of 20 and the first half of 21. And that's why those numbers are pretty similar, but you can see how much higher the volume is. It went from 3.4 billion to over 4 billion and just for Reno Sparks. And again, I don't have the numbers all the way yet for 2023, but we're going to have a hell of a time even getting to that $3 billion mark. So again, that's more of a problem for us doing this for a living than it is for you guys that own property or think about buying or selling a home. So this slide, basically all I did was take the same information, but I added in the outlying areas. So for people that might be interested in Fernley or Dayton or Carson City or Minden Gardnerville, all these areas show up in our multiple listing service, so I can help people buy and sell homes in all these areas. And you can just see the numbers got dramatically bigger, but at the end of the day, it's the same story as far as we're down 25 to 30% in volume, but the price points have not changed that much. Again, this is the full year. And again, in 2023, we're going to be lucky if we get to high 4.5, 4. It's not going to be even close to what you're seeing there. So again, that for us in it is way worse than for you guys that actually own real estate. So the question I get all the time now is am I stuck where I live? If I were someone who wanted to sell a house and move to another house, or a first-time home buyer that wanted to get into a house, the problem becomes, what do I do? So I just want to ask you guys, it's kind of an interesting question. How many people in this room, I'm one of them, that has an interest rate on their home under 3%? Okay, under 4%, under 5%, and then does anyone in here have a rate over 6%? Reed does, Brian does. So 2 people, and both you bought this year. When did you buy? Yeah. So for them, but it's in the 6s, right? Yeah. It's not 8% like most lenders you're talking about right now. So again, I did a video. If you go to my YouTube channel, you can see it. I did it earlier this year where I was saying the market was frozen because people now aren't putting their home on the market because it is really difficult to give up a 2.875% interest rate, or Zach's at 3.25%, or many in this room that have really low rates. Why am I going to do that to go, one, to a higher price house and
to an interest rate that might be 8%. So you're seeing people that are feeling stuck. I thought this was crazy, but this is the numbers of people, like by percent. So almost a quarter of all mortgages that are out there, and in the country, there's literally 52 million mortgages. Almost a quarter of them are under 3%. Well, you've just taken all those people off the table. They're not selling these houses. If you go under 4%, you're at 62%. And these numbers are slightly down from where the peak was, which was the first quarter of last year, because some people did get forced to sell. You're gonna have the occasional person that either got divorced, relocated to a new area, maybe owned a bunch of rentals and thought, I want to get rid of one of my rentals, or they inherited a house from somebody that maybe had a low interest rate. But I'm only saying, only people selling a house are people that have to sell. So if you don't have to sell, people are not selling just to say I want a bigger or smaller house. They're just kind of staying put where they are. And literally 92% of mortgages are under 6%. So if everyone's under 6%, and now we're currently at 8%, this tightening of the market and people in the industry that are going to see less and less transactions, for us it even gets worse. But for all of us that own homes, we just stay and sit in them. Prices might come down a little bit more, but not dramatically enough for it to really make a difference for any of us. So I got a couple examples. I get this question like, what do I do? So as an example, and I'm going to use both my kids as an example right here. We helped Zach buy this house, just like we helped your son buy a house. I think he bought his the year after. He paid $280,000 for this house. He's at 3.25% interest rate. And that house right now, his payment's like low $1,300. If I took that same house today and tried to have my daughter buy that house, one, I can sell this house for $425,000, and she's gonna be at high 7s or 8%, and her payment's gonna be 2.5 to 3 times as high as what Zach got. Doesn't make me smarter with my first kid than with my second kid. It just means we got lucky on timing for him and unlucky on timing for Sydney. And just kind of is what it is. But even if Zach said, Dad, I want to get a bigger house, I want to move, then for him to go just from his house to my house, his payment's going to go from $1,300 to over $3,000. And even for him, unless he was 2 income or more people or more renters, he's kind of stuck in that same situation too. Now, he could, because he bought far enough away, we could probably rent this house out, probably $1,000 a month more. So he has that income that he could use to take to the next house. But of course, then he's got to come up with a down payment to buy my house. So you see these people that are kind of in this situation where they're like, what do I do? And people are always saying, why haven't prices come down? Rates went up and up and up, and prices came down 10 or 12%, but you would think at 8% interest rates, prices would have come down dramatically more. And here's why that's not happening. So the first thing is inventory. This is new home sales construction. So this literally goes back to the early 1970s, and that dotted line that runs through the middle is the average number of homes that were built by new construction companies over history. And you can see once we hit that lovely recession that some of us remember, some of us don't, where our home prices went plummeting through the floor, home builders, let's be honest, were scared to death to build because who was going to buy these homes? So we've got a 14-year stretch where it just finally got corrected, where there wasn't enough new home construction for population growth or people moving into our country. It's like, where were they going to live? And so they finally got there, and now with rates being where they are, builders are kind of slowing down a little bit more. Cost of goods got way more expensive. The only people that are building, and you guys have seen them because my son's company does them, you've seen apartment buildings go up all over town. So if you're looking for an apartment, there's plenty of those around, but the rents for those aren't any cheaper than the rents for anything else. He would tell you these places are literally rented out before the buildings are even completed. So at least it's giving people a place to live, but it's not making the affordability issue different. And again, I did a video about cost of living in our area, and as much as gas is more expensive and food and all the things that we're all complaining about with all this higher cost of goods, I've been all around this country in the last 3 years, and we're really not a whole lot more expensive than other places. It's the housing piece, whether they're renting or buying, that is the problem. And if you can figure that part out, like Zach has or Alex has, or anyone that's got these payments that they can figure out, well, great, because we could rent Alex's house for probably $1,000 more than his payment is too. So those kids are in good shape. But for Sydney, she's living in my house right now, and even if she wanted to go buy something, she'd need 3 or 4 roommates, and we'd have to find her an older house in a cruddy area so that she could afford at least all 4 of them pay $1,000 a month or something like that. So the new construction inventory at this point is not going to be enough to help flood the market with inventory. The next slide talks about existing homes. So if you look on the right here, same week 5 years ago, we're down 45% in the amount of homes for sale than we were right now. And so again, because of what we just talked about, interest rates are where they are, people are locked in these great rates. So you have all these people like myself. If I were to move out of the area, I wouldn't sell my house. I'd rent it out for $1,000 more than my payment, and I would keep it. And that's the problem, is you're seeing all these people just hold on to these properties. So this is my friend Lawrence Yoon. He's an economist at NAR. I love to listen to his stuff. And he was saying, and this is probably more middle of summer, this slide, he was talking about if we literally doubled the amount of inventory on the market, there'd be enough buyers to absorb that. Now, that may have been the case earlier this year when rates were in the 6s. I don't know how I feel about that right now if the rates are at 8%, because again, a lot of people are getting completely priced right out of the ability to even afford the payment, even if they got multiple roommates and multiple people to help them, or even if someone like you, Martin, were like, we paid for the house and then we did a loan back to our kids, like private financing. There might be other ways, but it's really challenging. And I don't know if we got that much inventory, if it would really help us that much right now until rates came back down, because it's just an affordability thing. I don't use 2021 and 2022 for stats because that whole pandemic piece and all those low rates kind of skewed all the numbers. But if you go back to 17, 18, and 19, that 1.3 to 1.2 million, that's the number of homes that were on the market nationally. And now the 647 number, which I think they just literally updated the slide today, was now like around 700,000. It's still half of what it was back pre-pandemic times. And again, that's been the issue. And that's part of why prices surprisingly have stayed where they are versus where we think they probably should be at this point. So the only other way you're gonna get more inventory is right here. So if you were around in 07, 08, 09, what happened was the market got flooded with people that were upside down in homes. And so they were basically putting anything on the market, whether it was a foreclosure or a short sale. And so we got flooded with homes. And then of course, prices did come down. But right now, even with what we just talked about with cost of goods and cost of just general life being more expensive, that is not going to cause people to have a foreclosure, because I don't know if you've seen these articles on the news where they talk about how foreclosure rates are doubling and tripling. Well, yeah, sure they are. When there was basically almost no foreclosures, and then during the pandemic, you couldn't foreclose on anybody because they wouldn't let you. So if it goes from almost nothing to a little bit higher, yeah, it might have doubled. But even if it doubled, the numbers are so small that you're not going to see a bunch of foreclosures hit the market, even if people, this is the percentage of people that are at least 3 months past due on their house payment. But even most of this room, if you said I'm 3 months on your house payment past due, we'd be able to sell your house because you have tons of equity probably in the property. So if you go to the next slide, this is what we're talking about. So if you go from just literally before the pandemic, the first quarter, because I always think of it as starting in March of 2020. So from then till basically middle of this year, you have almost 50% of homeowners have at least 50% equity in their house, which means, if you don't know what that means, is if my home's worth $600,000, means I got a loan less than $300,000. So people have plenty of room for if prices fall $100,000, I still have a couple $100,000+ worth of equity in my house. So I'm in no danger of foreclosing. Worst case, for some reason, if I had to sell the house, I just sell the house. And then you go into a different situation. So the next slide, again, this is part of that too. I found it shocking. I don't know if you guys believe this or not. That 38.7% is the number of homes owned free and clear. And I was shocked that the number was that big. And obviously it's typically people more older than me that may have owned a home for a really long time that owned them free and clear. But between those and the people that have more than 50% equity, you've got almost 70% of the market. And I promise you, this 31% at the bottom that have less than 50% equity, a majority of those probably have 25 to 40% equity in their house. So you're just not going to see this flood of foreclosures hit the market. Again, the inventory issue is going to be the bigger problem as to why the prices aren't coming down. Home prices. If we were sitting here again, this whole trying to predict what's going to happen in the market, if we were sitting here in December a year ago, they were saying rates were going to slowly go down this year, but prices were also going to go down this year. So if you go to the next slide, the red numbers are these kind of big institutions' predictions in December of last year of what they thought the prices were going to do this year. Then I don't know the exact date they redid their predictions, but if you look at the far column in the current forecast, at worst you're at break even, and at best you're at 6%, which honestly in my brain, 3 to 6% would be, quote unquote, normal appreciation that you would see on a house. But if nothing else, they're not going down. So for the people that are waiting, even though rates keep going up, for the prices to come falling through the floor, it's just not going to happen. And again, this is just a couple of other economists. I follow a lot of stuff trying to keep track on all this stuff. They've been shocked, and obviously the fact that prices didn't go falling through the floor exceeded their expectations as far as all that stuff goes. As silly as this might sound, literally over the last handful of months, if you've got a nice house that is showing well, that is in good condition, your home will sell quickly and your prices are slowly going back up. So we've seen this little wave of up and then back down and then back up. And I'm going to show you on the next slide. These again are those 6 predictor companies. So if you go back to January of last year, the green, this is a month over month appreciation. It's small and the numbers are going up very small. And then the numbers went 6 months going down and now there's creeping back up. So it's just this leveling of basically flat pricing. And you would think that that wouldn't be the case, but from looking at the stuff that we're looking at, you're not all of a sudden getting offers that are $50,000 to $100,000 below the list price. The only time that happens is if somebody dramatically overprices their house. Here goes the whole rent number. Zach and I talk about this one all the time because again, when they build these apartment complexes, the rents are never low. I own rental property in another state. I own rental property here. Again, like I said, Kylie does property management. We manage about 85 homes. We almost never have a vacancy. We never reduce the rent. At best, it stays flat. It always goes up. And so for people that are renting, I get it if you're renting because you can't afford to buy a house. But again, that is not going to be a long-term strategy. That is going to be a short-term strategy. And the sooner you can get into something, the better. And of course, when rates do come down, and it's kind of hard for you guys to see, but if rates do come down to 7, 6.5, and 6% at those particular loan amounts on the left-hand side, then you're going to see on the far green area, like how much that affects the payment. But again, that is only the principal and interest part of your payment. So I did a video about this before where we had 3 homes. I can't remember if it was 575 or 675. I took 3 homes that were basically in 3 different parts of town that basically sold for the same price. And the monthly payment for all 3 was dramatically different because the older house had low property taxes and no HOA. The newer houses had way higher property taxes. One had a HOA. So you had 3 homes that were all 575. And if everybody put down 10%, then everybody would have had dramatically different house payments. So it's not always just about the price, and it's not always just about the interest rate. So I always get super annoyed when everybody's 100% always focused on the rate. That's one factor in it. And obviously, if you're buying homes at a cheaper price, like I'm buying homes in another state as rentals, these homes are all between $180,000 and $250,000. And I literally bought the first one at 3.5% interest, and I just closed on one in September that was at 7.25% interest. And my one at 7.25 pencils like $300 or $400 a month. And my one at the beginning was almost $700 a month, but the numbers still work. So for people that call me and say, I want to invest in real estate, well, we might not be able to do it here right now because trying to buy a $600,000 house and make it pencil doesn't always work, but you can do in other parts of the country. And again, I know realtors all over the place. That's how I'm able to do in other parts of the country. This is how we got where we are. And what I really wanted to tell you guys, and I hate doing this because it's something I get asked all the time that I never really get to do, is people ask me about, Brian, break out your crystal ball. What do you think is going to happen, right? And you have to be careful because as we've seen before, trying to make predictions on where this is all going to go is literally impossible. And if I told you what happened over the last 25 years, a bunch of years ago, I promise you I wouldn't be standing here because I'd own so much real estate free and clear. I'd be making so much money. I wouldn't even be selling real estate anymore. I'd just be telling you guys who to use. But here's what I'll tell you. The future of real estate in Northern Nevada is going to be really good because, again, what we care about is what's going on right here. That's really all we do care about. And it's so funny because if you start Googling articles about Reno, you'll find articles all the time about best places to live, top 10 for this, top 20 for that. The one that made me laugh the other day, and I have no idea how they come up with this number, is Outside Magazine basically had an article that said, we're the happiest place to live in all the country. Did you guys see that? I don't know how you measure that or how you figure it out. I know most of you guys, and we're all pretty happy people, but I don't know how it's happier to live here than it is to love someone else. But if they want to say great stuff about us, that works for me. We're still a top 10 state for migration and for people coming into our state. So people are still coming here. And I'm sure you guys saw the article too. And I've seen articles like this in the past where the Grand Sierra Resort, supposedly this time, is going to have $1 billion of private money. We've seen stories about this before, but somebody's researching our area because if they're even considering spending $1 billion on our community, that's just good news for us, right? It'll create all kinds of jobs and economy things. And again, I don't know how that makes prices more affordable and cheaper. That becomes the issue. So the other thing is for many of you guys, I know you guys don't drive all around town like I do, but if you've never been out on USA Parkway and seen where Tesla and all these companies are and driven that 20 miles, that is literally the biggest industrial park in the country, and there's all kinds of stuff out there already, and there's room for hundreds more companies out there, just go to the EDON website and you can see all the companies that have come out there over the last 5 or 10 years, and everyone has their opinions on, was Tesla good or bad, or these other companies good or bad? That's a story for another day. All I know is this, it put Reno on the map, and when I travel around the country and I tell people where I live, other than they still think we're really close to Las Vegas, they now know where we are and we're not this old cowboy town because we've changed our economics based upon we're not all reliant on gambling and hospitality and all those kind of things. So there's all that. The last one I wanted to tell you right here was, I don't know if you heard this either, but Warren Buffett just invested, you probably know, $800 million in 3 new home construction companies. 2 of those companies, D.R. Horton and Lennar, they build lots of homes here in Reno. So I'm always thinking if Warren's willing to invest $800 million, which for him is not a lot of money, it's still $800 million in builders like that. That is also another good thing where you're going to eventually see these builders build more homes over time. It's just a matter of, are they going to wait till rates come down? We're just not sure how that's all going to play out. So what I keep trying to tell everybody is, even though the news will try to scare you and think other things, the future of real estate here locally and in many other parts of the country, because I talk to realtors all over the place, and believe it or not, there still are some markets that are hopping along and there's a lot of stuff going on, but there's a lot of realtors and people I know around the country that are really struggling, and the fact that there's just not enough turnover for us in the business, which again, for most of the world, that doesn't matter to them. It only matters to us trying to make a living. The question I get asked the most is, when do I think interest rates are going to come down? When do I think they're going to get more affordable on pricing? Because that's been the big issue here locally, is affordability, availability, and when is that going to get better for me? And I'll tell you this, I've researched this over and over and over again. I spent all kinds of time trying to figure this out. And here's what I'll tell you. In the short term, they said rates this year were going to go down, and by now we should be in the 5s. And guess what? We're at 8. And way smarter people and way more educated economists than Brian Lessinger have looked at this stuff and they can't figure it out. And I even found one place, they were literally trying to tell me what rates were going to be 5 years out. Like, you can't tell me what rates are going to be by Christmas, let alone 5 years out. So that number is always kind of a hard thing. But here's what I tell everybody, and the math on this is super, super simple, okay? If and when, and I'll tell you, I'll give you my exact prediction of what I think is going to happen. When those rates do come down, prices are not going to get cheaper. So this affordability problem that we have here, I don't know how we're going to resolve that. That's my one concern. I don't know. And for all of us that already own homes, that's fine for us. And if rates do come down, then someone like myself might say, oh, okay, I'm ready to buy another house, and I could either sell mine or rent mine out. But I just don't see how that issue is going to go away. And so because most sellers are not going to want to give up these super low rates, and because most sellers are going to be like, I'm just going to keep it if I can, the only people that are going to come off that slide where it said 92% of people have an interest rate over 6% are what I call have-to sellers. And that means something happened. Someone died, someone got divorced, someone got relocated and they can't afford to keep the house. It's going to be these people that have to sell. And for most of us, that's the only people we're helping sell homes right now. It is very rare for me to get someone who wants to sell and go move somewhere else unless they're cash. And the cash people are doing that. And typically if they're cash, that means they're 65 and over. I'm not seeing a lot of people my age and younger doing cash deals. So here's what I think is going to happen, okay? Sometime, and I'm going to say in the late second quarter, early third quarter next year in 2024, I think rates are going to come down. And whether that means they're going to be under 7 or under 6, I can't tell you how fast they're going to come down. But I can tell you this, and I don't talk politics ever, but last I checked, about a year from now, there's an election. And if the economy stays the way it is and rates stay the way they are and the recession keeps happening the way they are, the people in office are not going to win. And whether you want them to win or not, that's your business. I'm not going there. Because of that, I think sometime after the winter, after that first quarter, you're going to see them come back. Do I think it's going to be dramatic drops? No. But if all of a sudden rates were 6.5%, a lot of those people that have mortgages at say 5.5, 6, might be willing to then put their home on the market, make a move, do something different. And you're just not seeing that right now. So that's what I think is going to happen. You can quote me, call me. Like I said, I hate to make predictions, and I just did it on a camera. And whether I'm right or wrong, I don't know, but I keep telling people the same thing. If you can buy a house, regardless of the price and the interest rate, and you're comfortable with that payment, then I tell everybody to buy a house now. And I'm not saying that just because I'm a real estate agent, because one of two things is going to happen. It's either going to get less affordable and rates are going to be 9, 10, 11, or 12, which has happened before, luckily not while I was a real estate agent, or you've locked in that price now and rates do go down and you could refinance it into a lower rate and now you've made it more affordable for yourself. But I'm not one of those people that's going to tell you, oh shit, just buy now. And I promise you rates are going to be lower next year and you'll be able to, do a 2-1 buy down and make it work. I will never tell anybody to do that. You better be comfortable buying a house at whatever the rate is now and whatever the price is now. And then if you're fortunate and rates do come down, great. Then we call all the lenders that we know and get you in touch with somebody and let's refinance that thing into a lower payment. So that's kind of what I think is going to happen. Who knows? We'll see. And you guys can quote me on it. Maybe I'll do this again next year because honestly, as crazy as this is going to sound, I've never done this before. And as much as I am chatty Cathy with all of you one-on-one, I am not a public speaker. And I was joking, I've been in this room 1,000 times and I've never stood on this stage before. So there you go. And if you have questions, by all means, I will stay as long as you guys want and answer as many questions that you have. But that's what I think is going to happen. And I just see a few of the issues are going to be hard to resolve in the short term, and we'll see what happens with them. So there you go.
Thanks for watching today's video. We'd love to hear your feedback and your comments on what we had to say. Those of you out there that are loving with the content we're putting out there, by all means, please subscribe to the channel and be looking for more content for us in 2024. Thanks for watching. Have an amazing day.